live in Sydney. Leanne, welcome to you. So really we've seen, understandably, spikes in volatility as a prelude to our session today. As you survey what we're seeing this afternoon, how are you understanding it?
Carson, we have seen a pretty volatile day today. Of course, this morning we opened up in pretty negative territory, down almost 0.5%, even more, of course, off the back of a lot of those negative leads from the US and European markets overnight. But we do seem to have done a bit of a turnaround, and we are now trading relatively flat at the moment. So it does look like investors seem to have shrugged off a lot of these geopolitical concerns we did see coming through overnight. There was a little bit of concern around some of those airline stocks. Those were the ones we were going to be keeping an eye on. We saw overseas they were some of the worst hit, but we are in fact seeing Qantas and Virgin performing quite strongly today, and that industrial sector in general is up about 0.3% at the moment. Some of the other best performers being that staples sector, industrials and energy, but the worst performers of particular note, that materials sector, which is coming under a bit of pressure. But certainly been an interesting day today. It does look like we might in fact close the week with some gains. So coming into the start of session today, we were up about 0.65% for the week. So if we are able to maintain this position we're at for the rest of the afternoon, we should be able to close the week with some gains.
Can we talk Santos? You know, the bigger picture story, it was a rise, as you might well expect, a bounce in the crude price on all of this geopolitical roiling, as it were. We got a 5% lift up in Q2 numbers for Santos today. The stock, though, failing to fire.
That's exactly right, Carson. I think investors have been a little bit disappointed with the result that's come through today, and as a result we are seeing some weakness in the stock. Looking at some of those production numbers, it came in up about 3% on the prior corresponding period. So I think there was some expectation that we may in fact see a better performance, particularly given the fact that we saw the start-up of that PNG LNG project ahead of schedule, about 2 months ahead of schedule. So I suppose the question is, what sort of production numbers would have come through if we didn't in fact see that being started up ahead of schedule? So I think there was a little bit of disappointment, but certainly looking at the revenue numbers, they looked pretty positive. Revenue was up about 22% on the prior corresponding period and up about 25% for the first half, and they've also maintained their 2014 production guidance. So all looking pretty positive. Certainly long term, they've also indicated that the second half is expected to be stronger, and that will be the majority of its performance in the second half. So that is all looking pretty positive. There was also some positive commentary around that Gladstone LNG. That was something else we were looking out for. That is still looking like it is making some good progress. It's on budget, and its first deliveries is expected in 2015. Of course, there are always still some risks long term in terms of shipment delays, cost blowouts, and potentially capital expenditure risks as well. But certainly, despite some of this disappointing news today in terms of that production number, I think long term it still does look pretty optimistic.
What do you make of the rally in Asiano today? These, I think, are now 8-month highs for the stock, and really the chatter being could be poised for another kind of Port of Newcastle sale, a la, you know, clearing the decks on some of these, as the Chinese would believe, fairly lucrative assets.
Yeah, that's exactly right, Carson, and I think off the back of a lot of this speculation in the sale of some of these assets, we are in fact seeing investors reacting, and we're seeing, of course, a very strong performance today. It is in fact the best performer on the ASX 200. They have in fact come out today and indicated that they haven't confirmed what parties are involved in this transaction, but there is, of course, a lot of speculation around the fact that China Merchants Group may in fact be seeking a majority stake in these terminals. We know back in April that China Merchants Group was a part of that Chinese consortium, which was the successful bidder for that 99-year lease on the Newcastle port. They also own property assets as well as some banking businesses as well, and they do in fact think that Australia's export infrastructure is an attractive investment. So we do certainly know that they are wanting to increase their stake over here in Australia, so potentially they could be one of the parties interested. We do know that the company has been under a little bit of pressure. At its first half result, they did in fact record from losses of about 4.6%, and particularly in their terminals and logistics business as well, which has also been coming under pressure. So it certainly would look like pretty positive news. I think the market would probably react positively in terms of this business de-leveraging these assets. So again, off the speculation, we are seeing a strong performance today.
All right, a brief final thought on the banking space. NAB not doing too badly, all things considered on markets, with about 1/4% rise, so it's kind of matching ANZ's performance this session. You at Bell Potter upgrading the stock today to a buy from hold. What are the catalysts there?
So NAB, we know, has been one of the banks that has been underperforming. So since the start of the year, it has been in fact down about 2.4% in comparison to some of the other majors that are all up about 3 to 4%. So as a result of their UK operations, we know have been coming under pressure. NAB really has been underperforming. But Bell Potter has done a bit of an analysis on the company, and given that they have a new CEO due to start on around the 1st of August, Mr. Andrew Thorburn, they do in fact think that some of his actions sort of over the next 12 to 18 months or so will be pretty positive in order in sort of an attempt to reinvigorate the bank and turn around its returns. They do view that he will be able to manage NAB, including its UK operations, in the same way that he managed the Bank of New Zealand, where he did in fact have a very strong track record. So if he is successful in doing this, we could potentially see some higher sustainable returns coming through for NAB. So as a result of their positive view on this new CEO stepping in, they've also lowered some of their Aussie dollar forecasts going forward. So as a result, we've seen an upgrade from a hold to a buy, and have in fact lifted the target price as well.
Very, very good. Thanking you so much. Have a good afternoon.
Thanks, Carson.
Bye.